All right, this is Jeff Scott. This is 12:29. It's about 8:40 p.m. Happy holidays to everybody. Hope everybody has a safe, healthy, and happy New Year this week. Futures are open but relatively flat at this time. I've entitled today, Bernanke Rally Still On, although it did have some fraying at the edges on Friday. As always, disclaimer, education purposes only. I'm a doctor, not a broker, and I pay for all the tools that I use. Give you an update on our meeting. That's the 15th and 16th with an optional dinner at the 14th. I decided to allot a maximum of 20 spots. I don't sell anything. I break even around 15. I'm not doing this to make money. I'm doing this for interest in education and helping other traders like people have helped me in the past, and also to give people a chance to get to know George Lee. So there's no reason for me to have excess numbers, so capped at 20. The 10 of you whose checks have come in already, you'll be getting something from me in the next couple of days, confirmation. $750 includes trade station indicators. If you paid $750, you don't want the indicators, you'll get a refund. $500 is general regular admission, $850 for a couple, and we'll include breakfast each day, including snacks, refreshments. As I said, there'll be a meet and greet on Friday. Right now, it looks like, depending on how many people we end up with, we'll pick a modest price restaurant with a private room. And if I get about 15 people, then I'll pick up the tab. If not, it'll be on our own. The agenda is really about how to trade and make the trade, not just the hypothesis behind the indicators. First, we want to help you set up your tools for success, whether they're websites or some of the various packages we use, including HGSI, TradeStation, Thinkorswim, EdgeRater, and Magenta Trader. Once you set up your tools, we want to help you find setups through scanning. And then the third part will be actually training. You found setups, how to look for triggers, how to make the trade, how to pick stocks versus options, position sizing, money management. Fourth part will be the process that we do on a nightly basis to prepare. And lastly, some of the tools that I use, like Gameskeeper and George might use, to help track performance. I will send out a request to all paid attendees for other things that they would like to learn about during the meeting. Old slide, but it matters to me. You have to find people who you believe in, who you want them to teach you and train you, and then you got to develop your own style. So I call them influences to help me be my own guru. Ian and Ron of Woodward and Brown Investing, Alexander Elder, William O'Neill, Morales and Catcher. Bigelow is my favorite candle guy, Van Tharp for position size and money management. Here's some websites that I use. You have to learn to trade, and you learn from people that you want to learn from and you respect. I have a lot of different programs on my computer, but what I really need on my desert isle is a real-time platform, and then the programs we'll talk about tonight, HGSI, EdgeRater, Magenta, although we probably won't get to much Magenta or MarketSmith. Same market thoughts as last week. We are in a Santa rally. It usually goes for two days after New Year's, so that would take us to, I guess, Thursday and Friday. It's an interesting year. I don't think people had a lot of tax loss selling to sell in December. I wonder if January doesn't get a soft touch where people take profits so you can have a little bit longer to pay the taxes. Plus, those profits, for me, for example, will help me pay taxes I owe for some of the money that I've realized in 2013. As you know from last week's review, it's been a hell of a good year for many people, including myself. TV meeting will be in March as usual. I'll be a speaker there, and I believe George will as well. Software, the website, highrostock.com, the free weekly reports under investing strategies from Ron Brown. You also have some from myself. And the software is free for 30 days, including data without asking for a credit card. I also post these movies on YouTube and both my blog at HGSI as well as my website, my YouTube site under JASCancer.com. You can see all my old videos. Again, just to remind you, coming up in about 6 weeks, this will be a great meeting. I hope to do this on an annual basis. If it's a big success, we'll do another one probably in August in Florida might be a little bit toasty, but we'll figure out a good place to do one in the fall. Parting message, be your own guru. Investing is a business, make sure you have the right employees, tools, and software. Continue your education and trade the market we get, not the one you think we should get. So on that note, let's take a look at this market. Let's try and do this today in less than an hour for a change. All right, I like to typically start with a quick review of with using EdgeRater tools and HGSI. Start with an HGSI, the group performance analysis, where I have a number of groups that I look at and I track how they did over the last week of trading. This is from end of day Friday to end of day Friday. It could skew if there's big gap ups on Monday or Tuesday, but to me it's the best way of measuring. S&P 500 for the week was up about 1.27, and that is my benchmark. My stocks were up 1.74. The GF All-Stars were up 1.64. My high beta list was up 2.5. That gives me an idea of what stocks are moving. High beta stocks don't always perform well. Best of Woodward and Brown, big performance, up 3.3%. Interestingly, despite the big week, IBD 50 and HGS 100 were half as good as the S&P 500, although still positive. And my Bow Watch list, which looks a lot like HGS 100 and IBD 50, was a struggle at only up 0.57. Why is there a big difference between my buys and my holdings? I suspect my holdings had a few more commodity-based plays in them. Walter Energy, Cleveland Cliffs, U.S. Steel, all of which had a big week, and most of which were probably not in the IBD or HGS list. I like to look at the Hindenburg to make sure we're not at a point where the institutions are selling to the individuals, signifying a top of the market. We had a signal of 12.6 and 12.17. I guess 11 days would be Monday if we're going to get another one. We haven't had one since then, so I'm going to continue to be aware of, but still doesn't keep me from being bullish. What does have me a little bit concerned, you can see here the percent of new highs in the NYSE, all-comers index, meaning warrants and preferreds, extremely high, and you might be concerned that we might be getting a top. That you can look at bucketology and see that 84%, this is an EdgeRater, an automated scan, 84% of the stocks in S&P 1500 are trading above the midline of the Bollinger Bands. Some of the heat, frankly, has come off of it as those above the upper Bollinger Band pull back a lot on Friday. And I think there was some profit taking. It could be a top, especially some of the internet plays like Facebook, Amazon, Priceline, but I think it was probably a one-day rotation profit taking, and I'm not ready to call the bull market of those stocks over. Also in EdgeRater, you can take a look at a number of key markets, and then what I really focus on, and not even what the markets are, is down here. This is on these various markets, the percent B, so anything above 1 means they were so extended they were above the upper Bollinger Band. As you can see, they gave off a little bit on Friday, still very green. Percent B times Bollinger Band with all on a buy across the board. So overall, the market seemed to be very strong. Now, things I looked at this weekend that I thought was kind of interesting, and I'm going to put a question mark on some of the validity here, but this is using EdgeRater called the warehouse view. And I looked at the last week of trading, and I looked at what was working and what wasn't working. So a couple of things stood out to me, and you have to have been here before to understand some of these. The thing that was most strange was some of the top performing stocks in the market, the highest ERG stocks, actually had the worst week. And I think I know why, and I mentioned some of that rotation in the internet stocks. Some of the bottom fishing stuff actually had a good week, some of the lower ERG. If you look at EPS rank, some of the stocks that didn't make money actually outperformed stocks with higher earnings per share rank. Relative strength rank, except for those stocks that had none, more relative strength continued to be a positive. And group rank groups seem to matter a little bit this past week. The D&E stocks that were in distribution a week ago actually outperformed those stocks that were A and B. And hard to make a big deal on boxes for over just 3 or 4 trading days or 3.5 trading days. But some of the ones below the 1s and 2s and 7s actually were leading. So perhaps that's indicative of profit taking and not necessarily indicative of a top. So next I'd like to quickly go into TradeStation, and I like to look at the 3 major indexes with elder indices. You can see green, green, and green on the S&P 500, so buy there or buyable. Extended above the upper envelope, that's worrisome. We did get across positive on the histogram. The line is turned up. It still has a way to go to not be negative divergence, but at least we got positive on this peak where we were not positive on the last high. So short term, the negative divergence might be out, but I still want to get above this peak to feel like I'm out of the woods on the negative divergences on the MACD. The NASDAQ had some weakness on Friday. You can see blue here, green on the weekly and monthly, but also at above the upper envelope. It's, if you go back to early parts of December, this progressive reduction in MACD histogram height with higher highs, the so-called MACD divergence that we've been looking at was fixed, although we still have a divergence compared to going back into mid-October. So that's perhaps an optimistic. And then if I look at the Dow Jones Industrials, green, 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 and it too, higher high and a higher high on the MACD, even when back in October. So perhaps some of the divergences are easing out, so that could be bullish. One of the new things that I added to my week work is those who watch this know that one of the things I picked up from George Lee that I use in my trading is I like to look at mobile breakouts from a squeeze. And so I track those real time. Now I can also track those stocks that are having a PSAR as well, a flip in PSAR, and George uses those as trading signals. And so I've actually now created scans, and I can also do it in radar screen, where I look for stocks that have flipped their PSAR within the last 2 or 3 days and now has a mobile breakout from a squeeze as a potential way of finding new stocks that are breaking out. So for example, one of the stocks I like a lot this week is YY, and you can see in YY, hopefully you'll see in YY, oops, gave you the wrong chart, that your PSAR flipped and a mobile breakout on Friday, and I think this is setting up an interesting buy point, but more about that later. So my feeling on the market thus far is bullish looking. Perhaps some of those MACD divergences are being reduced. Friday was not a pretty day for some of the leading stocks, and we'll see if that carries over into this week or if Santa Claus continues to rally Santa Bernanke through the end of the week. I like to go into HGSI. Within HGSI, I usually go into my warehouse, go down to my user groups. I'm using in Ron's last data 1208.13, and I go in here, Major Markets Plus, and I go into start with top-down analysis, and I could see that, whoops, here we go, perfect. You have 21 different indices in this group, and they're ranked by, it's all technical price and volume with a heavier weighting towards recent, but since it does look at the 13-day force index, that means you're getting 2 or 3 weeks of input as well. We can see the Dow, NYSE, and small caps all leading to the top side with this combo ranker, and that Treasury bonds, volatility, dollar week. Some of the large stocks, here's the NASDAQ 100 actually down at the bottom, interestingly. If I look at 5-day performance, silver had a very good week, up 4.2%. Bunch of the indexes up top. Gold was up 2%. and the tough week was for utilities, the dollar, treasury bonds, and volatility. So for those that are high growth stock investors, that should have played into a good week. Let's just take a quick look through these markets. We'll start with the Dow, and what you'll see is continued a nice uptrend, red candle high on Friday on the Dow. Everything is green up here, getting extended at the top of the Bollinger Band. Is it due to come back? Yes, it is. Doesn't mean it's going to come back, but it certainly looks like it's getting to a point where you might expect some of a correction. I looked at the NYSE, similar picture with the red candle high. Oh, well, I didn't call on the program, which probably means there was not much change or was up. It was up 0.21. So actually, it was a positive day. It just closed lower than where it opened, white painted red. So not a red candle high. Everything is green there, up at the top of the Bollinger Band, getting to a point where you might expect it to correct. If I look at the Russell 2000, actually, look at the Russell 2000, same old story, red candle high on Friday. Still in an uptrend, starting to get extended. I'll sound like a broken record. S&P 500, I think it's up 29% now for the year, red candle high, top of the Bollinger Band. So what I see is a series of major market indices that, for no other reason except that they're getting extended, may be getting into a point where they want to pause. That said, they may go sideways and they may go up. So it's just they're bullish. It's just at a point where you might be concerned that they've had a big run and they need to pause to refresh or pull back. What's not working now? I can look at the dollar. And the dollar was actually had a big up candle on Friday, but still closed low on the day. We'll see if we can get above that 50 and stay. I'm a little confused as to what to expect with the dollar. Improving U.S. economy, dollar should go up. The rising interest rates and the Fed reducing, easing, the dollar should go up. Some of the craziness with healthcare, ACA, Obamacare maybe pushes the dollar down. Commodities may face headwinds if the dollar goes up, but a rising tide of the economy may rise those as well. But right now, dollar has to prove it's going up. It had a positive looking candlestick, but was actually down for the day, a few pennies on Friday. Volatility, what can you say? It's at a point, it's getting close to a point where it bounces from. It had a positive day on Friday, but it too is in a horrible downtrend and has to get above that 200-day and stay there to be meaningful. Gold and silver, both in long downtrends. Is this the week that it's done falling? Was that the bottom? Is it going up? Your guess is as good as mine, but maybe it's time to start nibbling if if you're so inclined. I won't believe it's different until it gets above the 200 and stays there, or certainly gets above the 50. But I think people probably started buying last week as we saw silver shares were up 4% for the week. But you still got major overhead supply and moving averages that might continue to keep it from going much higher. After looking at the markets, I then look at the industry groups and try to get an idea of where money is flowing. There's 145 groups. I'm going to look at them for a 2-day force up and a 2-day force down. You can see 70 of the 140 are up, 27 are down. So that tells me right there some softness in the market because the 70 has gotten lower and the 27 has gotten higher. A couple of things that stood out to me. Internet retailers, some of the leaders in this market, had a tough day on Friday and probably explained that edge rater chart of weakness in the leaders. Here's Facebook. Can you get it down at the 17 or even at the 50? If I can get this down to 50, I might be a buyer down here, but right now I want to let it come in some. Amazon, had a bad day on Friday. Is this just because of UPS and will it bounce back up? Or is it a little bit extended and it's going to pull into the 50-day moving average and give me a better buy opportunity? I doubt I get to the 50. It seems to bounce off the 17-day, but that's still another $10 away from here, so no reason to be out running to get Amazon. Priceline gone sideways and then had a bearish engulfing pattern on Friday and a kahuna down. Is it had its run? Don't know. Maybe it was a one-day affair, but boy, there are a lot of people, a lot of profit dollars to cash out and price line. Yelp, another one pulled back to that 50-day. So I think you could see a lot of weakness in the internet retailers. Biochemistry, usually one of my favorite groups. Let's take a look here. So Ariad, Gilead, some of my favorite stocks made it to the list. They were up over 5 days. I'll make a comment on Ariad. I've been practicing medicine since the 80s. I've been an oncology cancer doctor, at least trained as a cancer doctor since the late 80s, practiced for a long time, and have been involved in the business side. I've made a lot of bad calls on Ariad. When it first came out, it got approved early with a black box warning, and this day is when it got approved. And when it dropped down here about 20, I said, you know, I might be buying down here because I don't think that black box warning is going to keep docs from using the drug. And as time went on, there became more and more evidence of side effects related to the drug. And ultimately, you'll see a big drop day coming. Ultimately, the FDA pulled the drug off the market back here. So that was in October. Now, I've seen the FDA pull drugs off the market. I've seen the drugs come back on after, more studies were done and we're negotiating with the FDA on the label. But within 2 months, this drug was put back on the market. And the other thing that I thought was remarkable was doctors continued to get exemptions from the FDA to give the drug to specific patients because this drug is the most effective drug for patients with specific molecular patterns of leukemia. So to summarize what I just said in English, the Europeans approved this drug despite the FDA taking it off the market. The FDA put it back on the market. Docs liked the drug so much, they were writing for it and going through hoops to get it, even when it was off the market. I think the stock has a shot to get back up to $12 to $14. And you can see it had two kahunas last week, pulled back on Friday after a big run up, almost a double. A double if you bought it back here in October. So I like Ariad, and I think from an intermediate to long term it's attractive. Gilead looks a lot like those internet plays with a bearish engulfing pattern on Friday. I don't know if this is a one-day wonder or if it's going to roll over. There's a lot of counter-currents about multiple hepatitis C drugs coming out in the market. But right now their drug is selling like hotcakes at a country fair that you're selling for 10 cents a cake. It's a great drug, and it will be the market leader, and we'll see for how long. Like Gilead a lot, as I've said on these calls before. Normally I don't spend much time on the downside. Airlines, I'm not sure if this is energy costs going up. REITs had a tough week, and I didn't find any REITs on my review that really wanted me to jump in and buy them. From the upside down, those that moved up, I like to look at the top 10, but let's make a few observations here. Oil and gas, oil and gas, oil and gas, oil and gas, oil and gas. So all the oil and gas groups made it into the top 40 or 50. Refiners lagging, but certainly exploration, equipment, drillers, and storage all look interesting. And I saw a number of interesting plays when I looked at them. Commodities, aluminum, steel, here's the integrated oils, I missed that one, coal, gold. Is there something going on with commodities? Don't know, but I'm pointing out something because these things haven't been sitting here. Home building popped up. Here's diversified metals and mining, another commodity. Home builders popped up a few weeks ago. Here they are, moving up to the top of the list. Regional banks have fallen off, as have biotech, as we looked at. Not a whole lot that I like in wireless technology. Sprint is getting some bids, so it's running up on huge volume, and that's giving it the big force of the group. You could see 50 million shares on a big up day. I don't know how to play that game, so we're going to get out of it. Communication equipment. It wasn't the Ciscos and Nokias that I liked. It was the Palo Altos and the Aris, and then maybe want to nibble at Ciena. Palo Alto breaking out to new highs. Not real impressive earnings per share here. There must be a story based upon technology, but certainly breaking out, had a nice day on Friday. Everything is green there. If you want great earnings, take a look at Aris Group. It's had a big run now from 17 up to 24 in the last 6 weeks. Huge earnings per share growth coming into the stock, breaking out again on Friday in a relatively weak tape. Ciena Corp, here's one that's pulled back, broke above the 50, had a kahuna a few days ago. Not great on the earnings per share short term, better longer term. This might be setting up as something to look at if they can hold the 50. Next group down is steel, and I'm going to take a quick detour and go look at Magenta Trader. And I'm going to set this date to be, let's go to November, and I was sitting at the Magenta meeting starting on the 11th. How do we do that? All right. So we were sitting in the Magenta meeting, and we were looking to find things that might be good buys in the end of the year. And what we wanted to find were to be stocks that were getting up to positive seasonality. And you can see this big run here between November and April for Cleveland-Cliffs. And so the time to buy Cleveland-Cliffs and some of these steel stocks are the end of the year going into the first couple of months. So let me redo this and get rid of what I did there. So sitting in November, we looked at Cleveland-Cliffs, and we saw a stock that had potential for a seasonal run. Now, I'm looking today, and I see a stock that's got some seasonality coming in. Let's give it a little bit longer time. Let's give it 30 days. And I can see that this is a very seasonal, strong time of the year for Cleveland-Cliffs. I don't like how this matches up. It should overlay it closer. It's been a strange year for Cleveland-Cliffs, and it's one of the stocks that we'll look at in a typical chart. But back in November, it had strong seasonality, and it's got huge seasonality right now. In fact, if I bought on December 24th and sold February 3rd, up 7 out of 10 years for a 10% return. Not great, but certainly something where you have a couple of good periods of time. February 25th, April 7th, up 8 out of 10 times, averaging 11.5% return. So you put those two together, and you've got about a 20% return over the next 3 or 4 months. So there's a lot of seasonality there. U.S. Steel, let's just take a look at this right now. This was one of their big calls in November, in that here it was trading in a range, and you had a hammer coming in there in early December, and this was a great time to jump in on U.S. Steel. This is a 5-year and a 10-year seasonality line, because U.S. Steel is going into some of the best seasonality that it sees in the year. 7 out of 10 times up, 6.5% over 2 weeks. But if you back this out, you see this big steep run. It's something that started in November. So the Magenta Trader, and I'll show you at the meeting how we use it, we scan it for stocks that have strong seasonality, And we also like to look at certain stocks to see how they might be faring at a given time. So here's Cliffs in a typical chart. Remember I said the seasonality started in November. Well, if you look at this in a traditional chart, Cleveland-Cliffs and Walter Energy were the poster children for the bear market, and that these guys had peaked in, that's not even where I guess that's fair. They had peaked here in 2010 and just sold off hard with other commodities. I remember in 2009, or actually it was probably back here in 2011, these guys were rah-rah-rah stocks in the recovery post-09. And at the height of the market, Cleveland-Cliffs put in an offer to buy ANR, Alpha Natural Resources, for about $110 a share. And that was the high of the stock forever for both of them. Walter Energy was about $120 at this time. And both of these stocks then had a massive sell-off. And both of them have now finally broken above their long-term moving average. So here's Cleveland-Cliffs, and you can see since July it's actually been in a very nice uptrend from the neighborhood of 16 up to 26. But what I like about it now is several things. Kahuna volume broke above the 50. I think we'll find there's a squeeze there. Everything is green. I think the PSAR flipped a few days ago. Take a quick look at Cleveland-Cliffs. So why now? The constellation with those mobile breakouts. You can see a mobile breakout here. There wasn't a squeeze, but the PSAR flip gave me a buy signal there. But for a lot of reasons, I'm pretty excited about this when I see it pull back, break above the 50 with the Kahuna. So I think Cleveland-Cliffs looks very interesting. Vale is an iron ore play, as is mostly Cleveland-Cliffs. This is a Brazilian play, not as attractive as it hasn't gotten above the 50 or 200-day moving average. However, it did have a Kahuna DI crossover, and unlike Cleveland-Cliffs, I think you're going to see that Vale, A-L-E, is really setting up nicely here with a squeezed mobile breakout and a flip of the PSAR, perhaps giving us a good buying opportunity there as well. So these are two commodity plays that look pretty good. U.S. Steel, as I said, seasonality in its favor in a big run. Seasonality doesn't go deep into the year on this one, so I think most of that run is done. But look at the earnings per share coming into the stock. And one that I did like, although it didn't have a great day on Friday, was RTI. I thought that was here. We'll find RTI in a few minutes. So that's steel. Home builders, we looked at these last week. This is what I liked about Pulte and Toll Brothers, and all of them, frankly, have the same pattern. Don't love the earnings about Pulte. I did like the multiple pocket pivots, and where it failed at the 200 here, it seemed to get above it last week and stay there, propelled by a number of kahunas and pocket pivots. And I bought into both Pulte and Toll Brothers. And Toll Brothers a little bit earlier, pocket pivots breaking above a squeeze. Everything is green, much better earnings per share growth. So a lot of home builders look attractive. You probably need to take a look at them. Diversified Metals and Mining Index. There's four things here I want to look at relatively quickly. Moly Corp, this is a rare earth metals company. They've certainly had their problems and stubbed their toes in earnings. They seem to be pulled this way and that way by the Chinese based upon what the Chinese want to do with the rare earth mineral policy. But it's been beaten up, and it looks like it perhaps is put in a bottom here. Kahuna, lots of volume, going to have some resistance perhaps at the 200, but if it gets above the 200, this may have a ways to run. Everything is green there. Walter Energy looks a lot like Cleveland-Cliffs, failed at the 200 here. On Friday, it broke above it. On volume, it's too has had a nice run since November from about 13 up to 17. I think this has a ways to run. I think that something might be different in coal this time. I hate when people say that. Here's RTI, lower left, upper right. This too, I think, had a mobile breakout in the setting with the PSAR flip recently. I like the pattern and in RTI and PSAR flip. It's squeezing. All it needs is a mobile breakout, and I'm in, and I'll be looking for that on this stock tomorrow. That might be my trigger to tell me it's time to buy. Next group down, oil, gas, exploration. There's a lot of them look good. You know, I've always been a fan of Continental. I think they remain a leader in this marketplace. And take this chart pattern, change the dollars, and pretty much every stock on the list looks like it. These stocks had a huge run, peaked in the middle of October, pulled back earlier in December, and this guy just popped above the 200-day moving average, makes money, looks attractive. I don't know anything about the company, but I love the earnings per share. I think it's called Sanchez. Well, you can see there's a lot of different oil and gas plays here. A cheap one has been Kodak Oil and Gas. Same thing, ran up, pulled back to the 200. It's got some great earnings coming into the stock. I'd like to see it get above 50 before I got too interested. Many of these are, here it is, here's Sanchez. Do not love this earnings per share growth. Pull back to the 200, pocket pivot, Kahuna, DI crossover, turning green here, great earnings. I think this is a secular change in the oil and gas patch, and probably worth finding something to get into when I see that much of a wolf pack of similar stocks with similar patterns. Aluminum, another commodity play. I mean, that should be the topic today. Didn't even look at this one yet, but I see it was up 7% in 5 days. Yeah, who would have thought Alcoa breaking out? Doesn't have much in the way of earnings per share growth, but probably deserves some investigation, kind of a cup and a handle and running, although too short to really be a cup. It's run a long way, don't know anything about it. But it is interesting, coal, metals, steel, oil and gas, something's changed. Diversified banks, a lot of foreign banks continue to be here. I've been watching Wells Fargo. Let's see what it looks like. I have Bank of America and I have BX are my big financial institutions. Wells Fargo's had a nice run. It's extended to the top of the Bollinger Band. Not much in the way of earnings per share growth, 2.6% dividend, but has really been performing nicely over the last several months. Pharmaceuticals, what stood out here? Allergan's done very well in the eye world. And you can see broke above the 200-day here. It makes money, expensive stock. Pfizer, not much in the way of earnings momentum. Pulled back below the 50, I would pass, but has a 3% dividend. The one I like here is I continue to like Valiant, which has pulled back to the 50. Maybe it's giving you an opportunity to get in without it being overly extended. Has great earnings per share growth. The other one I've been in has been Jazz, also extended some. I don't know anything. That's not Forest. Forget I said that. Don't really want to look at that one. Let's think of Forest Oil, which is a bottom fish opportunity. Integrated oil and gas. Some of the big plays here. These have refining, marketing, exploration, natural gas, etc. Exxon has run from October to the 82 range up to over 100. Earnings per share don't seem to be the driver here. It's probably oil and demand. Chevron kind of in choppy land at the top of its choppy range, but everything is green. Oxy had given us an opportunity pulling back to the 200. We'll see if it can get through the 50 and give us another opportunity to get in. Yeah. And just looking at the list and then moving on from here back. Oil, gas, equipment. My favorite has been Halliburton. Schlumberger came to the top here. A little bit of a shallow pullback, a bunch of kahunas last week. Gets above the 50, it probably runs. NOV, same exact pattern without the kahunas. We'll see if it can get above that 50 and run. As I said, the one that I have is, I have a fairly substantial long-term position in Halliburton, which has had a huge run since the Horizon disaster. All right, so that's top-down investing. Showed you commodity plays are in flux. Oil is burning. Coal, steel, aluminum, other metals, and rotation perhaps out of some of the things that have been leading. A couple other things that I like to do. I like to look at some of those indexes that we follow on a regular basis. So the October 2013 LLURs. This is an index of leading stocks that we picked in October to give us a clue of when the market was rolling over. And what do I see? I see that they had a little bit of a roll on Friday. Now, as long as they stay above the 50, I'm probably long. Above the 17, I might even have a little margin left. But if it takes out the 17, I'm getting nervous. One day does not a big move make, and I'm going to keep watching that. But it may have peaked. It had a red candle high. And I also look at our list of canaries. Again, looking for evidence that the market's rolling over. And this looks also a little bit toppy. And highs hitting and stopping there. Pull back to the 8-day exponential. It'll be interesting to see if these, Amazon, I'm sorry, whether or not the canaries, let's see if it looks the same, it looks even worse, can bounce from here, or are they going to pull back towards that 50-day moving average? So both of these are leading indicators of the market, and both of them showing some weakness. All right, what else do I want to do to finish up? Let's do a quick group performance, or group inclusion filter, and then I'll show you the stocks that I thought were interesting, and then we'll say goodnight. Tools, group inclusion report. Go into the smart groups, and let's look at some of my favorites. Under Ian Woodward Brown, let's look at best criteria, best of under 15, demand, growth, HGS 100 leaders, QEPs, stocks and groups to the upside, strong strong EPS, strength to strength, and turnaround stocks. And I'm also interested in those perhaps that had Bible gap ups and pocket pivots. And let's call this Web Gem 12.29.13. Let's look at the top 10. Sure. Nope. So these were the stocks. Yandex, Russian internet player, Eris, we looked at, Amberell, another technology play, Homeowner's Choice, C-Trip, travel, retail, thermoscientific. So these are actually different, but remember, these are bottoms up, seeing what made it into the groups versus top down. So let's take a look at these bottoms up stocks before we say goodnight. So just in alphabetical order, here are the top 10 that came out of this search. Amberella didn't love the earnings per share growth going forward. The market seems to like it, and it just goes higher and higher. It's extended. It had a red candle high. It's got the high jump invoked. I pass, although it's a beautiful chart. I just think it needs to pause. We looked at Eris already. Here's Beazer Homes. A little bit nicer pattern than some of the other home builders, not profitable the next 2 quarters. Chicago Bridge and Iron, another one that I found with Magenta Trader early on in the run. This was the time to buy when it came off a squeeze on the 50-day with a number of kahunas and a pocket pivot. Big run up from there, continues to do well at the top of the Bollinger Band extended. C-Trip, this is a, I believe, Chinese travel internet. Sort of Priceline wannabe, I guess. It's got earnings per share growth, pulled back, got above the 50 with a pocket pivot, mostly green. I like this one, and I might be interested in a buy stop if it trades above the high, and a sell stop probably not much below where I put my my thing at about $50. If it falls back below the 50, I want to be out, so why put my stop much below there? Homeowner's Choice Insurance for residential. I have to admit I made this run here and sold out because I didn't think the earnings per share growth would sustain it. Stock continues to do quite well. Like everything else at the top of the Bollinger Bands, mostly green, slowing earnings per share growth. Illumina makes money, not great earnings per share growth going forward. Several times Roche has put in bids to buy it. It's run up nicely this year, as you can see. Looks like it's getting extended, but everything is green. Thermo Scientific Fisher, you want to buy these things off of a major moving average. It's too getting extended by high jump, although everything is green. Certainly a leader. Ubiquity Networks is one that actually has nice earnings per share growth. Like a lot of other technology plays, it had a bad day on Friday. I'd like to see it get above the prior day high before I got interested, and it's extended as well. In Yandex, a Russian internet provider, I mean, this is kind of the level that it bounced back at last time, a little bit above that. If it can hold this level and keep going, that might be interesting, but it had an ugly day on Friday. So I use certain things, such as looking at various smart groups, like Best of Woodward and Brown, to make my life easy. I know that stocks that are in that list are attractive stocks. The ones under 15 are attractive stocks under $15. HGS 100, another list of attractive stocks. If all I did was look at those stocks, I'd be narrowing 8,000 stocks down to 120 and finding some of the ones that are likely to be winners and leaders. I know that Morales and Catcher are smart guys, and I know that Bible Gap Ups, these are scans that are done for you every day, often can find me some very strong stocks, as can pocket pivots. I also know that I can do simple scans in HGSI, such as put my view on all securities and take a look at sprinters. And I find 100 stocks that will be some of the leaders in the market. And you can see the sea of green here showing that they're leaders with high earned stocks. So there are a number of things that I can do, top down versus bottoms up, to help me find where the market's going and what the leaders are. Lastly, some of the stocks that I picked this week that will be on my sports card when the market opens. If I decide I want to be buying this week, it depends a lot about what the indices are doing. We looked at Aris Groups. We looked at C-Trip, homeowners. I talked about YY. Let me look at it again. I looked at it in TradeStation, but this is the pattern I love. High growth stock, sideways, pocket pivot, kahuna, off the 50-day moving average, and this stock has no-go breakouts and a PSAR flip. I think this is an attractive stock, and I don't think HGSI is right on the earnings. I looked at Market Smith, and the earnings look like there's earnings growth. So pause to refresh, basing, and breaking out. I like YY a lot. Oasis Petroleum is another cheap one. Jazz is another pharma. Not only is YY, which is a Chinese interplay, look good, so does Cena. Probably a little bit bigger story. Run up, sort of a cup. Pocket pivot breaking above the 50. Everything's green there in a MOGO breakout here with the kahuna in volume, great earnings per share growth. Cena might be an interesting one to look at. I mentioned Blackstone is one of the ones that I own from the financial. They acquired some great assets that they're spinning off, which is propelling the stock higher. It makes money. It trades at a multiple of 13 and has a dividend yield of 2.9%. This stock's had a big run. It was $8 or $9 not too long ago. But for a publicly traded asset manager, they're on fire. Red candle high and extended, so keep that in mind as well. Cabot, another oil company. All right, so coal's going to do well. Oil's doing well. Silver's doing well, maybe. Hypothetical, aluminum, copper. You're going to need tools. Manitowoc is one of the companies that provides, manufactures construction machinery, heavy equipment, heavy trucks. And this is a stock that's had its moments in the past and then got hammered. And it looks like it wants to go much higher, breaking out here. And if we are seeing an improvement in the world economy and we're going to see mining stocks increase and something like Manitowoc will do well. Another one, and one that I own, is United Rentals. Both of them have acquired a lot of smaller companies. If you look at construction sites that you pass on the road, you'll see United Rentals name on a lot of equipment. It's not rent-a-centers for couches as much as it is heavy equipment and the like for construction industrial companies. I think I'm done. So I don't know if it's time to buy gold. I suspect it's early, but at some point I'm going to probably want to start bottom fishing and nibbling. So I see something like this. This is obviously junk. It's junk off the bottom. It's a $3.50, $4 stock that actually appears to make money, had a couple kahunas this past week, and it's at least got me, my nose itching as something is going on here. So this is something I'm going to look at. And I'm not saying I want to buy it. I'm not saying I want to jump in and I want to buy Arch Coal either, which actually similar pattern but broke above its moving average, its 2-day moving average on Friday with a kahuna. But at some point, some of these beaten down commodity plays might become more attractive. There are a lot of coal stocks that look exactly like this pattern. So if I just go back into TradeStation and I look here at HGSI, what do I see? Logo breakout, PSAR flip, you know, in a squeeze. Is this the kind of stock that I'm going to take all my savings and my retirement money and go to the bank on? No. I might wish I did. But I think both this and A and V have a chance of going to zero. But if I have some speculative money around and I think the world economy is improving through the TSR flip on A and V as well, I might throw a little bit of money at these. Speculative money. Willing to risk half of it, perhaps, because this is sort of rolling the dice, but that's why I call them bottom fishing. So lastly, for those that didn't see all my stocks that I'm interested in buying, let me do this for you real quick, and then I'll talk a little bit about a few things and then say goodnight. So the ones that I thought were breaking out looked interesting were Manitowoc, G-Log, Toll, USG. Some of the leaders, we looked at Eris, talked about Jazz, talked about BX, Valiant, RTI. Some of the pullbacks, I was interested in CTRP, YY, Cena, CLR, Cliff, and Vail. Looked interesting to me, Sanchez Energy. Pullbacks that had signal jet, like the Kodiak, I want to get above the 50-day moving average. And then if you are interested in bottom fishing, and believe me, this is not hydro stock investing. It's the ultimate and bottoms up. If you're interested in taking that kind of a risk, these might be certain things that are telling us that they're getting ready to run. LI Nevada was up 12% over the last 5 days, and Arch Coal was up 6.7, and Molycorp was up 15. They may be interesting, but they're not high growth stocks. I hope everybody has, here's just my list in smaller print. I hope everybody has a great week. Those that are thinking about or on the fence to come to my meeting in New York, don't stay too long because I'm going to cap it at 20 so we all get something good out of it. You all have a great night and a great week, and may the force be with you. Just kidding. Hope you have a great, successful week. Bye, everybody.